Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hanks. Now time for Cash Tags. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn. And from LikeFolio.com, the VP of Research, Megan Brantley, is with us as well. Guys, we're talking shipping companies, and in primary focus here is going to be UPS and FedEx, which in my mind, sort of alongside the post office, at least here in the U.S., this is shipping as a whole.
Yes, it is. And I think it's so funny that people are so critical of these companies with their delays and all these things going on. I kind of want to say, like, turn on the news. You know, there's supply chain issues, there's, labor shortages, and of course it's affecting these companies. And I don't necessarily blame both of them for having to deal with some of these delays. But FedEx is sort of in focus because they have their earnings next week, Tuesday after the close. And there's a lot of things that are sort of affecting these companies both, but I do think they are very different companies. Now, I did see a note from Cowen this morning, specifically on FedEx, saying they feel very strongly ahead of this report because really this peak shipping season could hit all-time records. They also said that although they will expect to see some delay in shipments, which I think is sort of across the board, that with all these companies hiring, new people, it just really shows that increased demand. Both UPS and FedEx have recently hired a good amount of people, tens of thousands, to sort of account for all these new record levels of shipments. So I think if there's any sign of the company seeing strong demand, it's really that. But in the last few quarters, both companies have seen strong results as, of course, we've seen a surge in e-commerce and people just needing to get more things delivered. If my apartment building is any testament of how many people are getting things delivered, it's ridiculous. I mean, the amount of cardboard boxes we have is insane. But in fiscal 2021, the actually U.S. domestic residential package volume mix grew about 5%. And another highlight is CapEx we're seeing is actually increasing for FedEx, which would potentially not be a good thing. It increased by about $1 billion over the last year. But where I see the positive of that is FedEx is really focused on its spending being towards innovation. And right now it's expanding its fleets. It's also, creating better technology for deliveries. It actually recently just announced a partnership with Salesforce to sort of help these supply chain woes and also handle this massive influx in e-commerce. So I would say that although they are spending more money, which could be a concern, it seems like it's going towards good use to sort of the future of shipping, if you will. And, it's hard to not talk about both of these names without taking into consideration Amazon, which I know you all discussed on the previous segment. But I think that a lot of these Amazon fears have been overblown. And with this huge surging demand for getting things delivered and shipped and last mile delivery, I think that I don't see why all three of these companies can't sort of, coexist in the space that I think really, right now is seeing such booming growth. But our first tweet today sort of discusses Amazon versus FedEx, which says Amazon has invested heavily in warehouses and is growing its own fleet of airplanes, trucks, and vans. Potential headwind for FedEx if they do decide to get into that business. And now I kind of look at this tweet, and while I agree and I think it's a very good point for the long term, I kind of feel like this is something we've been talking about for years now. And yet, I do think that these companies can all mutually coexist. But our next tweet talks about some more of this happiness, which I'm curious what Megan's thoughts are. But our first tweet talks about people just, not being happy with these delays and the last mile delivery greediness these consumers feel. So our next tweet of the day says, their on-time delivery stats have been abysmal, which has cost them and their shippers money. Chewy has had to send me 2 replacement orders in the last 45 days. UPS is much more dependable, so much for absolutely positively FedEx delivery. So this is all regarding FedEx delivery, of course, when they say there. But Megan, again, I think it's really funny when people tend to blame UPS and FedEx as if there's not, macroeconomic headwinds sort of to take into account here. It's almost like when people blame the airlines for their flight being delayed when there's so many things that go into that. So I guess I kind of defend both companies, but I'm curious to see how they stack up in user happiness because, right now, again, we are in the most greedy consumer for delivery, I think.
Yeah, you're exactly right. I think that consumer expectations are rising. The consumer is getting greedier, and this is impacting just some of those happiness levels when we look at UPS and when we look at FedEx. Overall, these sentiment levels are close to airlines. So this is one of those just sectors where consumers like to complain if they don't get something on time, if something is behind schedule, or if they feel like it's not fast enough. And we see whenever we look at these that this has impacted FedEx a little bit more significantly than it has UPS. Whenever we look at that change in consumer happiness, an 11-point drop is pretty significant. UPS, a 4% drop, that's actually pretty respectable. So I think that this shows there is some growing separation between these names in terms of execution, at least on the consumer facing level. We're not going to capture a lot of these B2B mentions. We're mostly capturing these mentions of consumers who are receiving packages and what those expectations are. And I think that this gap, obviously 11, falling by 11 is more than falling by 4, but this is widening the overall consumer happiness levels between UPS and FedEx. We see that gap at about 16 points. So UPS sits about 16 points higher from a consumer happiness perspective versus FedEx. So I think that this is just something, at least from a consumer side, we start to see UPS pulling a little bit ahead of FedEx. So definitely watching for some execution improvements out of FedEx.
Megan, when I look at these companies, and I'd be willing to bet that Jenny Horn probably has a first name basis with some of her delivery men, as she gets probably so many packages. We all know what the similarities are between these companies. One is a blue truck, one is a brown truck, one is a white truck. What are the main differences? Because it sounds like to me, one of the biggest hurdles they have going into the holiday season is those packages, those business to consumer packages. That's lower margin business. And a lot of the articles that I've been reading on these two companies are the margins. UPS has promised some pretty high margins that they aren't delivering just yet. UPS seems to be doing, FedEx seems to be doing a lot of things right, but what it all sounds like, and some of the reasons why these stocks have sold off, they're all worried about their margins on these companies. And what are the similarities between them that we kind of know? What are the differences between these three companies?
I think that whenever you look at specifically FedEx versus a UPS, I think UPS recently has talked about being better, not necessarily bigger. So I think that's kind of a different strategy and a different mantra. And this is them trying to improve that execution. And that's partially probably why that consumer happiness may be higher. But as you mentioned, that margin mix may be a little bit different. Whenever we look at FedEx, we see them, as Jenny talked about, they're investing in this technology. They're trying to be smarter from a logistics perspective. I think that their ground shipping is a much smaller portion of revenue in general. But I do think that from an overall, this purchase intent mentions, so these mentions of consumers actually, sending or receiving a package with UPS or FedEx, FedEx is outperforming here. So they are, that growth is actually higher versus 2019, whereas UPS, we're actually starting to see that slip versus 2019. So I think from a momentum perspective, at least from a growth perspective, we are seeing some outperformance out of FedEx, but I think that this is translated into just some execution issues on the consumer side that's showing up in sentiment.
So, Megan, I think that's a really good point because, again, we do make this comparison, but they are different. And from my understanding, UPS sort of specializes in these domestic ground delivery, where FedEx actually specializes in time-sensitive international air freight. So I'm curious, and I know you only track English-speaking tweets, but I'm curious if the international component actually has a negative impact on their consumer happiness. Because I mean, just from my experience, when I see couches that you get from overseas, right now the wait time is like 6 months. I mean, I see time and time again right now, international shipping seems like an absolute nightmare. And if that is, FedEx has more exposure to that than UPS, I could see why that would be an issue for its consumers.
Yeah, I think that could definitely drive down that happiness, because a lot of times when you're a consumer, you don't get to pick who's delivering the package that you're ordering. So if you're ordering a couch that's coming from overseas, you don't get to pick if it's UPS or if it's FedEx. You're kind of dependent on who the business selects as their shipping provider. And a lot of times these businesses are selecting FedEx, and issues outside of FedEx's control may be impacting these timelines. And so I think that that's definitely an important consideration to think about whenever you look at these consumer happiness levels. And I think that this chart, these trends just illustrate why these expectations are so high. And the reason that we're showing this chart is just to show that while there is some normalization in e-commerce versus last year when that was, a really popular thing to talk about, now e-commerce, I would say, is just a given. Free shipping is just a given. But this same day delivery demand has actually grown on top of those 2020 levels. So to see this, this continued rising demand for shortened delivery timeframes, up 22%, even over 2020, I think that that's really significant. And so this is one of those areas that I think both FedEx and UPS are trying to, wrap their brains around about how do we get these packages to consumers as quick as possible, but also remain profitable.
No, definitely. This is not probably the way that they wanted to see this chart if they had to look at some of their internal metrics, Megan. But my question to you is maybe a little bit counterintuitive to what the data may suggest. And in many ways, I would argue that e-commerce is becoming more and more, as you said, a given, something that we just do and maybe don't even talk about anymore. Is there anything to maybe a theory that I have right now, which is if we're talking less about these companies, they're probably improving their execution a little bit?
Yeah, I think that that's a great point. A lot of times whenever you see the spur for someone to talk about something is when they've had a negative experience. I think consumers are less likely to talk about a positive experience unless it is just extremely positive. So business as usual, may result in lower volume. And so that definitely, I think that's a really good point, Alex. But overall, I guess, especially heading into FedEx's earnings next week, whenever we look at all of these things, when we consider the demand levels, when we consider happiness and kind of work out that algorithmic signal, we have that around in the low 30s. So this is just a slight bearish lean, mostly due to just some normalization overall. But I think that there's a case to be made that business as usual could mean lower volume comparatively.
It's a great point. And then on the longer term, kind of more sentiment-driven view, you talked about how oftentimes us as consumers, we don't have the choice in many cases, but we've talked about this before where there's this clear sentiment gap and it doesn't seem to be improving. In fact, it seems to be getting worse for FedEx versus UPS. Down the line, when it comes time to renew contracts or ever, companies establish these relationships, at some point, if it's affecting my business because FedEx is dropping the ball, why wouldn't I change my shipping to UPS? Is that a real risk if this continues?
I think that that's definitely something to monitor. We need to keep an eye on these sentiment levels to see if FedEx can improve. They're making a lot of investments to try to make these improvements in these timelines, and we'll see if that starts to take hold, if that starts to level up. But if not, I think that that's definitely an advantage that UPS has long term, and the fact that they're able to maintain such a higher level of consumer happiness versus FedEx. 16 points, that's pretty significant. So that's definitely something we want to keep an eye on long term.
Looking forward to the updates as we get them. Megan Brantley, the VP of Research at LikeFolio.com. Thanks as always. Looking forward to this report.